So, yeah, Rosa, what got you? Just tell me, what part? If it was the whole thing, say the whole thing, but what was it?
The whole thing. The whole thing. It was, oh my God, it's like totally, I know it says something about different countries and exchanges and everything. Maybe I just got to see it again, but
Yeah.
it just
Yeah, and that's sometimes again, when something's so new to you, you got to double back and review it again to have to pick up on it, right? So the links are there. You can watch it again, on your own time whenever you feel like it. And I'm sure after a few watches or maybe just one more watch, you'll get it, right? You know what I'm saying? But let me ask you this, if you don't mind me asking, and again, you don't have to answer this, all right? But what do you do for a living? Like, what's your professional, or what are you doing right now for work?
I work in security control room.
Okay. All right. So check this out. So I'm in IT, right? And we have what we call the NOC, the Network Operating Center. So in your profession in security, you guys have the SOC, the Security Operating Center, right? Where you guys have a central location where you guys manage everything that's going on with, in regards to security. So keep this, right? This is how I'm gonna try to break it down for you so that you understand what that video was all about, right? In your world, right? And you just apply it to Forex, right? Because it's the same. I'm gonna try to make it the same concept so that you get a little bit of understanding, right? Forex is a market, all right? Think of your position, your job as a market, right? What drives your market? Well, stuff being secure, right? People breaking into stuff, people stealing shit, people hacking stuff, right? You name it, right? You know what I mean? You guys are in position to protect something, right? Because of what happens, with the company and, your products and your services and all this other stuff, right? People somehow or another, one way or another, people find a way to try to break the system, find a loophole, take advantage, et cetera, right? You guys always have to be on your toes because people are always coming up with new ways to try to infiltrate, take, steal, whatever, right? So that's your market. Your market is prevention, right? You guys are preventing things from happening because certain people are doing certain things, all right? So if you get a lot of people, you guys got your software system that's monitoring everything, and if your software system is going off with all these red alerts, hey, somebody's trying to break into the back door, hey, somebody's trying to access this computer, they're not in the network, hey, somebody's giving security a hard time downstairs, they done came and they say they finna shoot the place up and whoop whoop, right? You got all of these factors that's driving what you guys do, okay? In Forex, those factors are an economy, right? If you were in Ukraine, well, what happened to your economy? It got attacked by another country who they don't want y'all to be a part of NATO, or maybe they just don't like y'all, whatever the case may be. It's whatever. But because you guys got attacked, right, it's affecting your currency, right? In some way, shape, or form, whether good or bad, most likely in a negative way. Because if you get bombed, right, your businesses are getting bombed, your schools are getting bombed, your parks are getting bombed, your homes, you name it, gas stations, just everything about your where you live and your economy, right, in the country that you're in, everything's getting destroyed. So what is that going to do to your dollar? All right, what it's going to do to your dollar is it's going to make it go down because you guys aren't going to be able to spend anything with your local currency. So there's going to be no demand. Nobody's going to want to have whatever the native currency of Ukraine is. Nobody's going to have that money. Like, I'm not going to say, hey, I want to exchange my US dollars for Ukraine, whatever the currency is. Let's just say it's a euro. I don't want to exchange it for the euro. So there's no demand there, right? So because there's no demand for that dollar, their currency goes down. It's just the name of the game. Well, guess what? If you guys weren't getting hacked, if nobody wanted to break into the safe, if nobody wanted to shoot a security officer, you guys, they'll probably be laying y'all off. They'd probably be saying, hey, we don't really have no crime here, so we don't need 100 people that we got here in the security operating center. We don't need all of y'all. We need maybe half of y'all, right? So what happens? You guys, you become less employees at your company, right? And then you're wondering why. Well, some people might be wondering, hey man, why they let me go? Because there's no demand, right? There's nobody who's doing anything to what do you call that? You guys can help me out with the word, but it's to solidify, right? You being there, right? You know what I mean? There's no need for you. Okay.
Yeah, there's no need, there's no use.
Exactly. You feel me? So I hope this, I won't go into too much because I want to get to what we got to get to. But from a high level, right, it's all about supply and demand. So just think of Forex with countries needing things or providing things, right? What are you doing? You're providing a service. You're securing stuff, right? You know what I'm saying? And on the flip end, the other people are on the demand side, right? So you're on the supply side, and then other people are on the demand side. They're wanting things from you guys, right? What do they want? They want access, right? You understand what I'm saying? They want security, right? You know what I'm saying? There's a list of things that they come to you guys for, right? Because there's demand. So the higher the demand for you guys, the more people are probably going to be working for your company, and vice versa. The less demand, right? The more people don't need security, right? People feel, at one point, people were, everybody had guns in their home. You know what I'm saying? I mean, they still do. But my point is, like, back in the day, you didn't worry so much, or maybe you did worry so much, but things change, right? And that's just what it's going to be in an economy. Things are always going to change, right? With supply and demand. With Russia, for example, right? Everybody knows gas prices went up high as fuck. So why did that happen? Because Russia is one of the main exporters of oil and natural gas. So if we place sanctions on them, which we did, right? The United States placed sanctions on them, and we get about 8% of our gas and oil comes from them, right? Well, guess what? Since they cut us off from their supply, right? We're not going to be able to get any oil or any gas, right? So therefore the prices went higher, right? So at the end of the day, Rose, again, it's going to be one of these things where you're just going to start realizing that it all boils down to supply and demand, and certain things about an economy affect supply and demand. All right. So again, watch that video when you get the chance, and just run through it a few times. But you're going to see that it's always going to be that simple. Okay. So yeah, it's Forex. Yeah, it's new. Yeah, you don't quite understand everything just yet, but just know that overall, it is a simple thing of just, supply and demand. We need this, or, we have this to give to you, or we want this. That's what it's always going to be. Yeah.
So let me ask you something. How is this different from the stock market and crypto? Or is it all the same or something like that?
Great question. The difference is the stock market only relates to businesses, or, one business, a company that has multiple, locations and things like that. Stocks are only related to a company or a business. Forex is related to the country. So all the businesses, right? Not just the business, but the infrastructure, right? You know what I'm saying? You've gone to places where, I'm in Florida, right? I'm in Miami, so everybody's down here, and everybody's having a good time. We got all the, we got everything down here, right? You know what I'm saying? But if I go to, I don't know, Alaska or somebody give me some state somewhere the desert at, you know what I'm saying? Like there's nothing, right? You know what I'm saying? I don't know. You feel me? But it's just one of these things where we're talking about the entire economy. I mean, the entire country versus just one particular company, right? Apple is just one particular company. Yeah, they're international. They have offices around the world, but it's just one company. So when we're talking about supply and demand, well, we're talking about it just from a company standpoint, right? Who wants an iPhone? Who wants a MacBook? Who wants an Apple Watch, right? Who wants an Apple TV? Who wants these things, right? A lot of people, right? And then who does Apple have enough supply? Of course they do, right? You know what I'm saying? So they have enough supply for the demand and right? But that's all you're really looking at when it comes to stocks is the company, okay? But with Forex, you're looking at the entire country. So you got to take in the factors that go into that is not just, what a company produces, how much money they're making every year, right? That's what you look at when you're looking at stocks. When you're looking at Forex, you're looking at, okay, what happened to inflation? What happened to interest rates? What happened to supply chain? What happened to unemployment? What happened to gross domestic product? What happened to PMI? What happened to natural disasters, right? Hurricanes, earthquakes, tsunamis, you name it, right? Because all of these things are a factor in your economy, right? I'm in Florida. We get hurricanes all the time. So what's going to happen when a hurricane comes through Florida? First thing, gas pumps shut down, right? Second thing, homes destroyed. Third thing, we getting floods, right? All of these things are going to affect, our economy, right? You know what I'm saying? We're going to have people not spending money, right? So there's going to be no demand for our dollar, and things are going to go down, right? Normally, you're going to start. After a while, you're going to start knowing how to piece things together. And what I mean by that is obviously, the obvious is, I'm thinking to myself, okay, what's going to happen to the dollar if, all of these countries have natural disasters? What's going to go down? All right. The dollar's just simply going to go down. So you're going to be able to match up, natural disasters with the dollar going down, right? Okay. Well, what's the opposite, right? Well, what will make the dollar go up, right? If interest rates go up. Okay. If interest rates go up, that'll make the dollar go up. These kind of things are called, this is taking fundamental analytics, which, what's happening in the world, in the news, and then matching it up with technical analytics, what you see on the chart, and just, getting, putting those two together, and then you're going to make your play. All right. But at the end of the day, to answer your question, the difference is what you're dealing with, right? The scope of what you're dealing with. Stocks, you're only dealing with companies. Even with crypto, to a degree, you're mainly dealing with companies. These are companies that have developed these coins, and they developed it for a certain purpose and certain usage and things like that, right? You know what I mean? Crypto doesn't represent all of China. Crypto doesn't represent all the United States, all of Africa. Crypto doesn't represent those countries, right? It's not a representative of those countries, right? But the dollar, are you spending dollars in Japan? No, you're spending euro. And are you spending yen in Japan, right? Are you spending yen in the States? Do you go to the store right now and then do you purchase your stuff with yen dollars? No, you don't. You purchase it with United States dollars. You understand what I'm saying? So those three things are all separate in how you evaluate them. Like, what's the difference? The difference is the scope, right, of what you're looking at to analyze. With stocks, it's just businesses. With crypto, for the most part, it's just businesses. But, there's a little gray area with crypto. And then with Forex, it's whole economies, all right? So just know, those are the, for the most part, that's the answer. But, those are the things you want to look at when you're trying to determine, okay, well, what the heck is the difference between, the stocks, and what's the difference between Forex, and what's the difference between crypto, right? They're all different assets, all independent of themselves, right? We got earth, wind, water, fire, right? All those elements, they're all different, right? You know what I'm saying? But there's a few things, well, there's two things that they both have that's the same. And again, I kind of teach this as we go along, but those things are technical analytics on the chart. Every one of these things has a chart, right? Bitcoin has a chart, right? Apple has a chart, right? And the Euro USD for Forex, the Forex pair, that has a chart. All of them have charts that you can analyze, and you can look at and determine, hey, what's going on with the charts? Guys, if you guys can mute yourself for me, that'd be great. I appreciate that. Unless you want to say something, guys, just go ahead and chime in. Yeah, those are the things that's the same, that they all have charts. The other thing that's the same is they all have fundamental things that happen, right? You know what I'm saying? So with the stock market, we have fundamental things where if we had a war, right, something happens to the stock market, okay? So this is something that happened in real life, but it's affecting the market. It's just something fundamental. Same thing with Forex. If something happens with the war, that's another fundamental thing with an economy, and it's going to affect Forex, right? Same thing with crypto. You'll have something fundamental that happened in the news, happened in the world, that's going to affect crypto, all right? So those are the two things that they have in common. The charts are the same, and the fundamentals are the same, meaning that there's something outside of the charts that's going to affect what happens to that asset, stock, Forex, or crypto, all right? So hopefully that answers it for you. If you got any other questions, go ahead and chime in and let me know.